Good morning. Welcome back to the second part of our panel discussion. Two more panels this morning. And so the topic, the focus of the next 15 minutes is all about cryptocurrency. It's a big topic. The last 12 months, you saw the market cap of cryptocurrencies going up from 17 billion to over 500 billion. It almost reached 800 billion beginning of the year. So you see the volatility of that. And then this raised the question from our point of view, is it just a hype? Is it a bubble? Or are we talking about a new asset class here? And I have the honor and the pleasure to discuss this topic here with the experts in the community. And I have Olga Feldmeier from SmartValor, Roger, Ali, David, and Andre here on the panel, and I want to give them a chance to really a brief introduction because we want to go deeper on the topic. And yeah, if you introduce yourself, what you do, and then we go to the first question.
So my name is Olga Feldmeier. I'm CEO and co-founder of a Swiss-based blockchain company called SmartValor. I've been in Bitcoin space since 2013, and I'm delighted to be here.
I'll stop this one. Works? Okay. Hi, I'm Roger Benites. I'm the CEO of BitInka and InkaPay. BitInka is currently the biggest cryptocurrency exchange in Latin America. And InkaPay is a cross-border payments and remittance platform that uses blockchain technology across the background.
David Blumberg from San Francisco. You here? I think it's on. Okay. David Blumberg from San Francisco. Blumberg Capital is our firm. We invest in early stage companies, series seed and A. Really internationally, US, Israel, Germany, Canada, UK so far. In terms of blockchain cryptocurrency, we're very much enterprise technology investors, so the blockchain is extremely appealing and interesting to us. The cryptocurrency speculation aspect, much less so. And in fact, many funds like ours are actually prohibited from investing in ICOs because of the current rules and regulations. But that will probably change in the future. So I think it's a very interesting time, and we like to be early, so that's why I'm here.
Okay, very good. Ali?
I'm Ali, CEO and founder of bitHolla, based in Seoul, South Korea. We provide technology, services, and tools for trading cryptocurrencies, for businesses, for professional traders, and retail investors. Happy to be here.
Good. Excellent. Andre?
Hi, my name is Horoszczak. I'm a founder of Billon. And I'm actually, after 10 years of working on Wall Street, coming to tell you that there is a possible to do some strange thing, which is blockchain without cryptocurrency. We at Billon are trying to civilize blockchain and technology, and we've done a lot to make it possible, including getting a first ever license for a blockchain-based payment system.
So I think I would like to start with, we had a lot of questions already in the previous panel discussion where the cryptocurrency market is heading. Are we seeing maybe 1,500 billion of market capitalization this year? Love to hear you, just from a business perspective, where you see the crypto market is going in 2018. Any prediction that you have? Love to discuss that with you. Olga, you want to start?
Well, I was quoted many times saying that Bitcoin can go to 100,000. I still hold to it, no matter what's going on with Bitcoin price today.
The question is the timing. Is it this year or is it...
Within the next year, maybe coming into 2019, right? And of course, on the way there will be a lot of up and downs. And, Bitcoin used to lose like 70% of the value within several weeks. We're used to that, right? It's not a problem. But I think it's on the way to still be there as a digital gold.
So, do you agree, Roger? Do you think 100,000 by...
I think 100,000 is a little bit aggressive, to be honest. I think 25K will be
25?
More conservative price. Like last year, 10K was like a real goal to reach. It went 20K. We saw a lot of people making a lot of money selling at 20K. We see a lot of cryptocurrencies that are growing because of the use they have, like Ripple, we have Dash. And I do think the market cap is going to go huge this year, with a little more conservative.
Other token that you think has a great future? What's your take in?
Right now, there's a lot of tokens. There's tokens that actually are not mineable, which are literally just tokens that have a fixed number of tokens. But Dash is a really interesting, for me personally, Dash is a really interesting coin. And then we see Litecoin as well, being used for transfer money around the globe due to the high price on the high fees on Bitcoin right now.
So David, is it a hype? Are you investing in cryptocurrency as an asset class, or what's your...
So it's a little bit Dickensian. It's the best of times, it's the worst of times.
Yeah.
The answer for us is that, again, the blockchain aspect, the technological aspect, extremely exciting. We stay away from speculating on the coins. That's not our business. I leave it to the experts. But I'll give you one interesting statistic. In 2015, none of the top blockchain investments had corporate investors. By 2016, all top 10 of the blockchain and largest blockchain investments in the United States had corporate investors. So it's starting to become prime time for real corporations to use it for real uses. That, I think, is very good. Which particular currency, token, et cetera, will succeed, I don't know. I don't care. That's not our business. We like to invest in technology.
So that's a good point. So your message is, and I can see that the whole market has moved into more open up to institutional investors. Do you see there are more institutional investors coming in? And what are the hurdles for them right now to go even massive into the market?
Sure. There are a few major hurdles. One is there needs to be more transparency and more regulation. Yeah. I'm not generally a fan of regulation. We have in the rest of the world too much, but in this area we have too little. Mm-hmm. But I'll show you that the cryptocurrency hacking threat is a gigantic risk for most institutional investors. The thing we just saw in Japan.
Yeah, the 500 million hack.
A North Korean attack on South Korean exchanges a while ago. These things institutional investors really can't deal with. Mm-hmm. But the world is moving in a better direction because we are moving to exchanges, the CME is trading the futures and so on. Those are good things. The institutionalization of this market is extremely important because while most innovative markets are pioneered by the consumer, the retailer, the retail person, fleeing bad governments, bad currencies, corruption, etc. That's been a lot of the growth for the retail side of it. And I applaud those people for getting out from under the evil of their governments with cryptocurrency. But for it really to take off, it has to become institutionalized, and the rules have to be fair for everyone, and the security risks have to be ironed out.
Mm-hmm. Ali, what's your take on this?
I agree with David. I think currently institutional investors are not there in the market because of the risk. There is a regulatory risk. There is the risk of hacking. It's an asset that basically there's no insurance or anything. Like if you get hacked, if somebody gets access to your private key, even as a big investment firm, like then that's it. Like you lose the money and there's no way to basically revert that. But I disagree with David in the sense that he says it's about the technology and it's not about the token. I believe that the technology, actually part of the ingredient of the technology is the token itself. So you need to have an actual coin, a token, in order for the system to work. So if you get into the details of, for example, how Bitcoin's blockchain works, it's basically a game theory, and the token itself is a big part of it. If you take that out, it doesn't become decentralized anymore or not permissionless. I've been researching in that space for the last 5 years. I did my Master of Computer Science in this, and I can definitely say that I haven't seen any technology that works without a token. So
the token at the end, what you're saying is, and it's important, it's at the end, it's not only a financial instrument, it's also would drive the adoption of the technology behind.
Correct. So it's
an incentive at the end.
It's an incentive
to do so. Oh, that's something that we have to keep in mind. No?
Exactly.
And I don't disagree with anything you're saying at all. He was asking if it's hype, if we speculate. We as a fund don't.
Oh, sure.
But God bless you, go for it.
Yeah, so the incentive is very, very important. So for example, Bitcoin and many other cryptocurrencies, there are miners, and these miners essentially are securing the network. And the reason they are securing the network is that they are incentivized to do so. They mine, they get paid, and it's sort of a very beautiful game theory that everything is aligned. And if you take that token out, it just doesn't make any sense anymore.